Hey guys, this is Vyom Joshi with Superior North. Welcome back to my channel. Enterprise Product Partners LP has been on my mind lately, and in this video we'll quickly review the company's fundamentals and find a rough estimate of the company's intrinsic value. So let's dive in and review Enterprise Product Partners LP.
Hey guys, I'm on Quick FS looking at Enterprise Product Partners LP. We can see that the company's market cap is about $57.2 billion. Quickly looking at the company description, we can see that Enterprise Product Partners LP provides midstream energy services to producers and consumers of natural gas liquids, crude oil, petrochemicals, and refined products. The company operates through four segments. The first one is the NGL pipeline and services. This segment brought in about 42% of the company's 2022 revenue. Second segment is the crude oil pipeline and services, which brought in about 32% of the company's 2022 revenue. Natural gas pipeline and services brought in about 15% of the company's revenue, and petrochemicals and refined products and services brought in about 11% of the company's 2022 revenue. Overall, the company has about 50,000 miles of pipeline, 260 million barrels of liquid storage capacity, and 14 billion cubic feet of natural gas storage capacity. Now let's glance over some of the company's key statistics. The company's current PE ratio is at 10.2. This implies an earnings yield of about 9.8%. The company's price to book is at 2.1. Price to sales is at 1.0. The company's 10-year median returns for return on equity is 16.8%. When we look at this graph, we can see the company's return on invested capital ever since 2011 has been in the high single digits. Next, let's look at the company's revenue. In 2013, the company's revenue was about $48 billion, and the year 2022, it's about $58 billion. Overall, we can see the cyclicality in the company's business, which is inherent with such a midstream oil and gas company. However, despite the fluctuations in the company's revenue, if you look at the company's gross margin, and gross margin is simply the company's revenue minus its cost of goods divided by its revenue. So it gives us an idea of how much money is left over once the company pays for its cost of goods sold. So for example, if the company's gross margin is 11.5%, what this means is every $100 that the company makes in sales, by the time it pays for its cost of goods, it's going to have $11.5 left. Next, looking at the operating margin. The operating margin is equal to the company's revenue minus its cost of goods minus its operating expenses divided by the company's revenue. So it gives us an idea of how much money is left over with the company once it pays for its cost of goods and its operating expenses. Back in 2013, the company's operating margin was about 6.9%, and for the year 2022, it's about 11.1%. Over the past 10 years, we can see that the company's operating margin has been positive, and it has been greater than 10% ever since 2015. Finally, looking at the company's return on equity. The return on equity gives us an idea of what kind of return can we expect to get on this investment as equity holders. Back in 2013, the company's return on equity was about 18.1%, and for the year 2022, it's about 20.3%. Over the past 10 years, the company's return on equity has always been greater than 11.8%. Now let's look at some of the company's key ratios. Over here, let's focus on the company's capital structure, focusing on the debt to equity ratio. This ratio gives us an idea of how much debt the company has in comparison to the company's shareholders' equity. Overall, over the past 10 years, we can see that the company's debt to equity ratio has stayed fairly consistent. Similarly, the company's asset to equity ratio has stayed fairly consistent. In fact, we can see that the company's leverage over the past 10 years has not changed much. In other words, the company has maintained its financial structure and it has not gone above and beyond in order to grow by taking on more debt. This goes to show that the company's management is being responsible. Next, let's look at the company's free cash flow. The free cash flow is what we get when we subtract the company's capital spending from its operating cash flow. In my past videos, in order to find the intrinsic value, I have done a two-stage model where I grow this free cash flow at a certain rate for the next 10 years, and then beyond that point, I grow it at a long-term growth rate into perpetuity. But just to get a rudimentary idea, a rough estimate of what the intrinsic value of this company may be, we can just look at this free cash flow and divide by the discount rate, which we can say is 10%. This is simply a zero growth perpetuity formula. So if you look at the $6 billion free cash flow figure and divide it by 10%, we get about $60 billion. So what the $60 billion intrinsic value implies is that if the company were not to grow its free cash flow at all from now into perpetuity, all it had was the $6 billion increments every year from now into perpetuity, the company's intrinsic value would be about $60 billion. I would also consider the $60 billion figure to be a pretty conservative estimate. of my intrinsic value because I'm not including any growth in my free cash flows. Additionally, a 10% discount rate means that on top of the 4% 30-year treasury yield, I'm including a 6% margin of safety, which is how I'm coming to the 10% discount rate figure. Next, looking at the book value. The book value is what we get when we subtract the company's total liabilities from its total assets. And over the past 10 years, we can see that the company's book value has not only been positive, but it has been growing, which is certainly a trend that we want to see. Additionally, we see a similar trend with the company's tangible book value. Now let's look at the company's valuation metrics. Back in 2013, the company's price to earnings was at 23.89, and for the year 2022, it's about 9.54. Next is the price to book ratio. Back in 2013, the company's price to book was at 4.02, and for the year 2022, it's at 1.89. Lastly, the price to sales ratio. Back in 2013, it was at 1.3, and for the year 2022, it's at 0.9. You can see that on the valuation metrics, all price to earnings, price to book, and price to sales ratio have been trending downwards. All these three valuation metrics tell us that we're getting a better deal. In other words, we're getting more bang for our buck today than we did 10 years ago. Lastly, since this is an MLP, we have to look at the company's dividends, since that's what midstream assets are known for, are their dividend payouts. Back in 2013, it paid out about $1.35 per unit as its dividend. And for the year 2023, it paid out about $1.88 per unit as its dividend. Over the past 10 years, we can see that the company not only has paid consistent dividend, but it has hiked its dividend every year for the past 10 years. Now let's go to Dataroma and see which value investors have Enterprise Product Partners LP in their portfolio. There are a total of 5 portfolio managers holding the security. Close to 9% of Bruce Berkowitz's portfolio is comprised of Enterprise Product Partners LP. Some of the other interesting facts about EPD is that all management and operation functions are performed by a holding company called EPCO, and officers, directors, and EPCO in total own about 33% of the company's shares outstanding. So we can see that the management and EPCO have a vested interest in the security. In conclusion, we saw that Enterprise Product Partners LP has good fundamentals. The company's capital structure has stayed consistent over the past 10 years. The intrinsic value of the company was about $60 billion, which is greater than the company's market cap, telling us that the company is undervalued. Additionally, the company's management and EPCO own about 33% of the shares outstanding, which tells us that the management has a vested interest in this company's performance. And the company has not only paid out consistent dividend, but has hiked its dividends every year for the past 10 years. Hey guys, that is all I had for you this week. Hopefully you found this video on Enterprise Product Partners LP interesting. If you like this content, please do like, share, comment, and subscribe. And if you have any suggestions on which stock I should review next, please leave it in the comment section below. I'll greatly appreciate it. Thank you.